us now is Ryan Payne, Payne Capital Management President, and Jeff Small joins us on Skype. He's the president of Arbor Financial and author of the new book, Turning Financial Planning Right Side Up. Ryan, we'll start with you on set here. Nike set to report these earnings on Thursday. Do you expect this momentum to continue?
Yeah, I think it is. I mean, they're just right on trend right now with this whole athleisure type trend where it's really more about style than the actual stuff. If it's great for athletics, it just looks good. And they've really killed it there in the direct-to-consumer. I mean, a lot more stuff's being bought right at Nike.com. They have like 1,100 stores now. So, Nike right now is, they're in the groove.
Okay, Nike in the groove. Jeff, I want to bring you in. Under Armour, though. Under Armour shares up significantly, double digits over the last year. What is Under Armour doing right?
Well, their sales growth is really improving, and it's just a hair below Nike's for the last quarter. But I expect Under Armour to try and turn it around. But they've got some negatives going on for Under Armour right now. Their metrics just don't measure up to Nike's. Nike's are almost 8 times greater than Under Armour. So Under Armour's got a long way to go, but they've got to improve the bottom line. They don't have any positive cash flow. They're not buying back stock like Nike, and they don't have the revenue and the growth that Nike has in the market share. So good luck for Under Armour. But Nike's obviously the better buy.
Yeah, Jeff, great point there. Ryan, let's take a look at this Under Armour chart. We'll pull it up on the screen here, a one-year chart. Even though Nike opening at an all-time high, this is an Under Armour chart, and this stock still down pretty significantly from recent highs. What do you make of that?
I just think that they totally missed the trend, right? Their stuff just doesn't look good, and that's the problem right now. When it comes to athletic wear, it's got to look good, and they missed that boat for a long time. I mean, the stock's down about 50% from its all-time high, and that's a big problem because the North American consumer just doesn't like what they have, and that's a big problem.
I'm curious too about Nike specifically. When the stock got a little tripped up after Zion Williamson's shoe exploded. Jeff, let's think back to that just a few weeks ago. That image, I don't know if we have a picture of it, but that image was just looked so painful. Any chance that event could negatively affect sales or did negatively affect sales?
Nike's stock price is up 10% since the shoe explosion, but just imagine the potential for product liability had he blown out his knee. I mean, that was absolutely remarkable. Now, the ultimate coup in the shoe business in May when he goes pro would be for Under Armour to try and sign him, but they're going to have to make it extraordinarily lucrative. This kid's going to sign the most lucrative shoe deal in the history of shoe deals as a pre-draft rookie.
Wow.
Okay, so to that point, Ryan, does he sign with Nike? I mean, this is pure speculation here, but long term, right, what could the potential impact on Nike be?
I mean, I think it could be huge. It's just going to keep on. They already dominate in so many sports, specifically soccer too, above and beyond that internationally, which is huge for them because their international market has potential growth. But I think that, I think Nike, if they sign him, it just goes with the trend. I mean, the stock's up over 600% the last decade. I mean, that's unbelievable. The market's only up 400%. They've been killing it. My guess is they're going to keep killing it.
Jeff, let's talk a little more about Under Armour because Ryan's talked a lot about what Nike has been doing well, especially with regard to direct-to-consumer, the Nike stores, and then international expansion over the last few years. What can Under Armour do to beef up its direct-to-consumer play? Because it doesn't have the same network of stores. It still relies on those third parties quite a bit.
Well, that's a great question. I love to take a Warren Buffett approach. And I spent some time in the stores, made some observations, and the store is really disconnected from the pulse of what consumers need. And their entire brand seems to be somewhat disconnected. They're hoping their new zero-gravity shoe line can lift up sales, and that's really what they're counting on. But they also need to beef up their sports endorsements and sign some athletes that are going to help carry the brand. That's really what launched Nike with the Air Jordans, and Michael Jordan really lifted that brand up and made it an international phenom in the sports merchandising business. And that's really what Under Armour needs to do besides getting back the pulse of what consumers want at this stage. They are disconnected.
But Under Armour's strategy there, Ryan, has been a bit different, right? It has signed massive athletes, Steph Curry,
Yes.
Jordan Spieth, Tom Brady, some female athletes, I do believe, as well. And so, I mean, what else can they do in that department, right, to beef up and to try to take on Nike?
I think it goes back to Jeff said. I mean, they've got to get more with the times in terms of style. It's all about style right now. I mean, think about some of the other big brands like Lululemon right now. They all look good, and I just think if they can't, in fact, they just replaced their chief of style, whatever you call it, with their brand design, cheap design. That's probably the more correct way to say it. Then they know that's their problem. If they don't fix that, I think they're just out of the game.
Can Under Armour ever get to that point?
I think, it's an investment in hope at this point, because you just don't know, right? You don't know if you're going to hire the right people that are going to get the right style. And that's what Nike's been able to do so well over the years. You mentioned Michael Jordan. If you would have bought that stock in 1984 when he signed, you put $1,000 in that stock, it'd be worth almost $1 million today. That's just how good that company has done. It's crazy.
A big bet for the layperson on Jordan there. A rewarding bet, that's for sure. Jeff, let's bring you in here. Look, one thing that makes Nike stand out too is for a long time it has taken a stand on social issues, or just kind of like pride a little bit in terms of its marketing campaign. That very much now in vogue these days, and I'm thinking about the recent commercial actually that aired with Serena Williams during the Oscars. Has that been a boon to this stock this year?
It really has, because they're supporting a market that really has a lot of product loyalty when they garner that market. Just like when they signed Colin Kaepernick and they endorsed him and they were putting billboards in all the major inner cities. It really is representative of another part of the market they want to go after. Pretty crafty move on their part. As far as the polarization goes of those moves socially, I don't see it impacting the other side of their markets. And that just shows how savvy they are, or let's say bourgeois they are from a marketing perspective.
All right. Ryan Payne, Payne Capital Management President, and Jeff Small joining us on Skype, who's the president of Arbor Financial and author of the new book, Turning Financial Planning Right Side Up. Great chat, guys.